Okay, let's move on and invite the management of CEAT on our show. Remember, tyre stocks were higher in trade. Even CEAT rallied close to about 7%. We didn't chat with the management post their Q2 numbers, but the numbers were fairly good. Margins improved on a sequential basis to close to about 7%. And this morning, we've woken up to a very sharp decline in rubber prices. Rubber prices are now close to a 2-week low. Kumar Subbiah, the CFO of CEAT, is now with us on the show. Morning, this is Rima here. In the conference call, you had indicated that you expect the raw material basket for Q3 to decline by 2.5% to 3%. Is this, commodity disinflation playing out as per your expectation? Because rubber prices have taken a tumble. And if you could tell us what are the average natural rubber prices today versus the average in Q2 and the margin expectation for Q3 now?
Okay, now we stand by our earlier projection of raw material prices going down by 2.5% to 3% in Q3 versus Q2. Okay, so therefore, I don't think there is any big change vis-a-vis our earlier assumptions. As far as rubber prices go, in the international as well as local prices, there has been gradual decline in the prices since September. Okay, and I would like to also point out that international prices will have to factor in the rupee depreciation. Okay, rupee has moved up from 75 to $1, now closer to about 82 per dollar. So, and therefore that also has some impact on the arrival prices, while the base level prices have come down. So overall, the local prices are in the range of about 148 to 150 rupees per kg ex Kerala, and international prices on CAF basis in the range of about $1,350 or so. So there has been a correction of about 10-15 rupees per kg in the last 2 months, both international as well as local. That is the kind of movement that we have seen.
All right. Hi, Mr. Subbiah. Good morning. I remember the last time we chatted, the hint was that by Q4, hopefully you see double-digit margins. Do you stick to that, going by what's happened, since the last time we chatted? And what about Q3? Should we see some further margin expansion going by what you're saying? Rubber prices are a little bit lower, and you'll also, have a benefit of some price increases. Go ahead, sir.
Okay, no, we took price increase in Q2, largely in the two-wheelers segment, which was long overdue. Sometime in the month of August, we took some price increase, and some marginal increases in the month of October and some of the other categories. Okay, as far as the current quarter is concerned, as the raw material prices are likely to go down to the extent of 2.5% to 3%, to that extent, there will be some favorable impact on margins. As far as Q4 is concerned, I think should the raw material trend continue downward as we are seeing in the recent past, and assuming that our prices remain the same, we expect Q4 margins to be a little better than Q3.
Will it be in double digits, sir? Because double digits we haven't seen all the way since March 2021, and the street is banking on some improvement. So double-digit margins in Q4, that was the hint last time as well.
No, last time you asked a question whether it is possible. Yeah, I said it is possible. Yeah. But I think we would like to provide some indication closer to beginning of Q4. Okay, a little early, because margin is also a function of not only on raw materials, but also on the top line category mix and things like that. Things look positive. We hope Q4 margins to be better than Q3, but we would like to wait and then only confirm maybe closer to the beginning of Q4.
Mr. Subbiah, is it better we maybe talk about gross margins, and will that do you have more confidence that there things maybe may continue to trend higher?
Yeah, it is. I think because the way rubber industry looks at gross margin is selling price minus raw material cost. Okay, so considering drop in raw material cost, we expect gross margins to improve. And you would recall our gross margin has moved down from closer to about 40% 1.5 years back to about 31% level. So therefore, there is some need for us to take the gross margins up. So we expect gross margins to move up in Q3 as well as in Q4.
Now that stands at 32.4% at the end of Q2. Could you give us a roadmap in terms of how this could go on? I mean, at the end of the day, this depends on commodity prices, so it's tough to call. But what's your best sense?
No, currently, the other way of looking at gross margin is that what is the raw material cost as a percentage of turnover? Considering raw material cost correction is expected in the range of about 2.5 to 3%. So that much expansion we expected to happen in quarter three. I think quarter four, we would like to wait a little more because we can't come to a conclusion based on one day's price. Many of our raw material prices are based on what happens in the previous quarter, okay, and overall our covers and things like that. We expect the gross margin to go up in quarter four, but we will be able to provide more clarity maybe closer to beginning of quarter four.
But to the extent of
likely to go up.
To the extent of 2.5 to 3, so that's 300 odd basis point improvement in gross margin over Q3 and Q4.
No, over Q3 or Q2, okay, and raw material being around 65 to 70% of our turnover. So if raw material cost comes down by about 2.5 to 3%, that 65% should be applied on that 2.5, 3% in terms of gross margin improvement in quarter three. Quarter four, we would like to little wait and then only provide you some kind of a sense.
Okay, so definitively Q3 margin should be better than Q2. Q4 margins, you're hopeful will be better than Q3, but you will assess, closer to the start of the quarter. What are the volumes that you're currently tracking, sir? So far in Q3, in Q2, your overall volumes were about 7%. Of that, exports and replacement were flat, while OEMs were roughly about 20%. So vis-a-vis that, if you could tell us, in the first 2 months of this quarter, what are the volumes looking like?
Okay, Rima, you are aware that in generally a quarter three revenue tends to be a little lower than the rest of the quarters. So therefore, we would certainly be seeing double-digit kind of a growth versus the same quarter of last year. Okay, however, quarter three volumes could be in line with quarter two or could be marginally lower than quarter two. So quarter on quarter, you would see that kind of a trend. As we saw in quarter one and quarter two, okay, OEM continues to grow faster than the other two categories. I think the same trend we are seeing in the first 2 months of the current quarter two.
So should we say 5 to 7% kind of volume growth in Q3 as per what things stand right now?
No, over the same quarter of last year, yes,
okay.
But not quarter on quarter.
Yes, okay, year on year.
All right. Mr. Subbiah, so business is shaping up well. The other triggers, you have raw material costs that are cooling off. You have the unlock that's working out, and you have a large proportion of exposure to the replacement market. The other point is, has debt levels peaked out? Are they close to peaking out? So by the end of this year, what will the debt number look like? And your Capex plan of around 750 crores, you're sticking by that, right?
Yeah, absolutely. In quarter two, our debt level moved up by about 200 crores.
Yes.
Okay. And, we are sticking to our initial forecast of 900 crores of Capex, which includes 750 crores of project Capex. So therefore, for the full year projection, we would like it to be in line with our earlier estimate. And just to tell you, in the first 6 months of the current year, we spent half of the 900 crores, about 450 crores. And from here on till end of the year, okay, we expect our debt level to move up in the range of about 300 crores approximately. It is based on our current overall cash flow estimates. Okay, it could change a little bit depending on how we manage our working capital.
You're saying 300 crore, the debt will increase over Q3 and Q4. So you could end up with a debt number of closer to 2,600.
Yeah, yes.
And after that, sir, in FY24, does debt further increase, or will it then be on a downward trend? Because you...
No, yeah. Sorry, go ahead.
No, go ahead. Just wanted to understand what is the net debt to Ebitda that you're comfortable with as a level as well if it continues to rise?
Okay, no, see, net debt Ebitda, we are generally keeping around 3. Under 3 is what we are normally working towards. In the event we see any risks in terms of debt level going beyond 3 is when we try to exercise some control on Capex. So as far as the current year is concerned, we would like to be in line with that. Okay, and in the event we see some risk, okay, quarter 4, we may exercise some control on Capex. As far as next year is concerned, okay, you are aware that in the last board meting, board approved a capex of about 395 crores in expanding our specialty tires, OHT tires at our Ambernath plant. Some part of that capex would be spent. We have not yet frozen our capex for next year. However, we would expect that to be lower than the current year. Maybe in Q4, we'd be able to provide some guidance once our annual plan is completed.
All right, fair enough. Thank you very much, Mrs. Subbiah. Appreciate you joining in. Always a pleasure. So in the second half, margins definitely will improve, although on a